Hello, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. This week, everything you need to know in 90 seconds at 9 o'clock was news there are ominous signals coming from the US benchmark bond market. But first, consumers in the US are reporting rising confidence, defying the trade war gloom of their employers. The strong jobs market is helping. The Dallas Fed survey of factory sentiment fell again as an example of that fall in business confidence. These businesses are still expanding, but at a noticeably slower pace. And American car sales are expected to drop more than 2% in May from the year ago. Higher prices keep buyers with their hands in their pockets. China's car sales are also in the doldrums, and we've reported previously that Beijing City is easing ownership restrictions. Now Shenzhen and Guangzhou are both part of the megacity in the south are doing the same. These are moves that could have a dramatic effect on industrial production levels as the existing restrictions are very tight. The impact on electric vehicles could be major. Yesterday, Shanghai's equity market closed up 0.6%, although that was much more positive than for most of the day's trading session. Hong Kong and Tokyo were up, but by a little less. Overnight in Europe, equity markets were mixed, but mostly lower. And in trading so far today, Wall Street has the jitters and is lower, down 0.8% after starting the morning with a good gain. They are rapidly evaporating into negative territory, however. And government bond yields around the world have dropped to multi-year lows, especially US Treasuries. It is a clear sign of growing investor concerns that global economic growth is about to weaken. And the OECD is reporting that G20 international trade was weak for the first quarter of 2019. G20 exports rose marginally by just 0.4% quarter on quarter, while imports fell 1.2%. Compared to the third quarter of 2018, when the first round of new tariff measures affecting US-China trade came into effect, G20 exports are down by 0.8% and imports are down by almost 3%. In Australia, their largest bank and mortgage lender is reporting that incoming home loan applications jumped to a 10-month high in the week following the government's surprise re-election win. This has been seen as another sign of firming conditions in their residential property markets. US Treasury 10-year yield is sharply lower today at 2.26%, so that's 6 basis points drop. Gold is down $7 to $1,278 an ounce. US oil prices are unchanged today and are still at $59 a barrel, while the Brent benchmark is at $70 a barrel. And the Kiwi dollar will start today stable at 65.5 US cents. On the cross rates are also little changed at 94.5 Aussie cents. Against the euro we're similar at 58.6 euro cents, and that leaves the TWI at 70.4. I'm David Chaston. That was 90 at 9, brought to you by interest.co.nz.